Ladies and gentlemen, welcome to the Unnamed Podcast with the great and powerful Brad Freeman from the Stock Market Nerd Channel, portfolio. I'm always the YouTube guy, so they're channels, but I guess they're just accounts on X. Yeah. And then the just as great and just as powerful, maybe even more powerful, the Evan Stock Market Nerd.
He's more powerful for sure.
Yeah, I would say less great, more powerful. I think that's an okay statement there. I'll take that one.
Less great. More
no, I'm excited for this conversation. What a busy week. What a prime time week. We got so much to talk about.
Yeah, we're swamped swamped with news and a lack of time this week. So let's just jump right into things.
What I'm excited about the most right now, we've had so much going on. I wanted to ask you about SoFi, but I'm sure that has been everything we've all been talking about here. What's been interesting for me though, is as we've gotten every single one of these earnings is the read-throughs into Nvidia and the CapEx spend. It is the part that, and I know Tanner, you are a big Nvidia guy. If we could kind of start there, I'm just curious your read-through here. I'm trying to pull it up right now, the chart that I had, but how are I believe Nvidia is your largest holding. So how are you feeling through this earnings season?
Yeah, I mean, if you take all of my positions and add them up together, it's just right around where my Nvidia position is. So I'm 50% allocated to Nvidia these days. But this is exactly the chart.
This is the chart. This is the
chart. This is what I've been focusing on. I mean, earnings was everything that I expected. CapEx increases. Talking about next year, going to see even more. A lot of talk about custom silicon, but I'll wait for Jensen to sort of clear away some of those fears that some people have, that it isn't just going to be all spent on Nvidia. Obviously, that's not going to be the case, but I do think that it will still be heavily in their favor. And I'm super stoked. Everything I saw from those companies is what I wanted to see. Larger CapEx spend than I would have thought. You know, the complaints that people had about Google or about Amazon was actually in favor of Nvidia, is that they're actually buying too many chips and spending too much on capital expenditures. So it was a nice little hedge for any of the potential downsides of what we saw this quarter from the Mag 7, was that they are just buying too many chips.
And you know, one of the things, and I'm sure Brad was all over this, with Meta that stood out to me. Meta, so when Amazon goes into these investment cycles, the stock doesn't like it as much. Then when it comes out and starts to invest a little bit less and more profit off those investments, the stock tends to do well. Meta is clearly going into an investment cycle, and they have all the reason to come in and miss on the EPS and make some arguments there. One of the things that stood out the most to me, and which would be huge for Nvidia, these companies are definitely continuing to spend. But if they're seeing profitability increases from this as well and actually seeing money from it, that cycle, and because you have to ask yourself on Nvidia, because it's not crazy priced right now, but can this type of investment continue? And that really needs to see these companies making money and profit from it. And Brad, I'd love to hear your take on this with what's happening with Meta here. Are they starting to see some of these AI profits? Because to me, that would be a massive, massive sign for Nvidia.
Yeah, I think this is Zuck still listening to investor concerns and maybe a little bit of PTSD from that year of efficiency and the year before that, 2022, late 2021 into 2022, and he was just spending like crazy, didn't care about what anyone had to say about it, was going to spend on the metaverse as much as he wanted to, and if you don't like it, you can shove it, and that was his philosophy. And obviously he kind of changed his tune a little bit and really fixated on driving the kind of success in the core business and creating the cash flow needed, and through a lot of AI investments to plug a signal gap that Apple left for them, to justify and to leave room for all of these hefty investments. So making sure that the business is in good enough shape and siphoning off as much or spitting out as much cash to make this not extremely noticeable on the bottom line, like you talked about. And I think one of it is cost controls and just discipline that they didn't have 5 years ago. But I think another thing is just massive revenue outperformance from these AI investments happening today. So when you have, I think it was like $3 billion of top line outperformance, that creates a lot of fixed cost leverage for you to be giving out $100 million pay packages to talented engineers and spending more on CapEx, raising your CapEx guide by another $1 billion. And I mean, the theme of the call was these AI investments in core AI are helping advertisement targeting, so price per impression, and engagement with better experiences significantly. So they ran through 5 or 6 products that they rolled out that are boosting Facebook watch time for video by 20% year over year, and time spent on Instagram and Facebook by 4% year over year, and so on and so forth. And that just creates more ad impressions, along with more valuable ad impressions, because they're so much better at targeting than they were even a year ago or 2 years ago. So that really puts them in a much better spot to be aggressive, kind of be spending like drunken pirates, like they are doing, and they do plan on doing next year, while still delivering that kind of operating leverage that we've come to expect. So a pretty special needle threading from them happening right now, because I mean, like you talked about, I think their capex estimates for 2026 were like 80 billion or something like that, and they came out with $100 billion number, so a full 25% ahead of the street. Microsoft, Amazon, Google, it was all more of the same, just significantly ahead of expectations. So just really impressive performance, because the ROI for their core AI investments is already so strong, when you can't really say that about a lot of other software companies. The only other thing I'd add is that these capex guides are certainly bullish for AMD and Nvidia and all those companies. But if you listen to where the supply chain bottlenecks are coming from and where they are the most crippling, semiconductor lead times are shrinking, and they have been shrinking for a few quarters. So these companies are having an easier time getting their hands on these chips, and it's really energy that's the bottleneck that they're all dealing with right now. And I think that's where some of this, not all of it, because a lot of it is going to be spent on more Nvidia GPUs and AMD GPUs. But some of that is going to be spent on figuring out how to find the power needed to actually scale more data centers, and offer more compute to their internal developers and public cloud for not for Meta, but for Google, Amazon, and Microsoft. So it's energy is the biggest problem right now. And yeah, I'm sure they'll figure it out. But we talking about just capacity, availability, and runways, and all that stuff. They are all pushing back their timelines and their schedules to when they think they'll have supply chain equilibrium, which is just it is good news for the runway. And even if that's not all going to these chip makers, it is good news for everyone in that discussion.
What are the energy names that you think benefit the most from these moves? Because
really not a space that I pay any attention to. I know nuclear energy is like Oklo and a few other of those other companies. That's where a lot of the gap is looking to be plugged. I know where the United States is looking to greatly increase fossil fuel production. People like Elon and a lot of others are figuring out how to continue increasing solar production without subsidies. So probably a combination of those three things, but I'm certainly not well versed in that space. So that's my best guess.
Yeah, but I have been thinking about that exact same thing. You continue to hear it over and over and over. You cannot shy away from those comments at all, that energy is the continuous factor that continues to pop up that is slowing them down at this point. So, pretty interesting.
Yeah. And Apple almost spent $4 billion in capex in a quarter. Like, whoa! I mean,
we're even at the point now where Apple is increasing capex spend.
I know,
they're wild times.
Wild times for sure.
I pulled it up on the screen because I knew someone was going to say something about Apple. Let me get this up. I just want to pull up something that Apple did that no one had on their bingo card.
Beat and raise?
Double-digit revenue growth, might I say. 10% is still double digits.
Yes, it is. And ignore the fact that it would have been 9% without the tariff pull forward. So it still counts.
Listen, there was totally a massive panic buying from people saying $3,000 iPhones are coming. So I bet you a lot of people went in to buy. The forward guidance, them saying, hey, next quarter we expect revenue to grow. They said, let's say 6 to 9%, somewhere around there in there, while she was expecting 3%. So there's still some positive impact there. This is a company that's been growing in the closer to 2-3% range. So some small improvements. There was increase in CapEx spend. They still didn't really give the street what they want with an AI strategy. But we'll see. I've seen some reports about there maybe considering some AI acquisitions internally. Who knows if they'll actually do it. But Apple had to get a little bit of mention in here.
They're shifting a lot of resources to making sure the upgraded Siri delays don't happen again. But they are spending a lot more on that, but it's not as apparent as it would be if it were just all incremental spend, because again, they are pulling a lot of resources away from other categories.
I loved that something no one had on their bingo card, a beat and raise. Nobody had that.
And here we are, guys. Don't look at the stock price today. Do not look at the stock price.
It's a tough day to have a fun stock price reaction. I don't think that's very telling of how good this was.
Yeah, no, I know. But the problem is it was outperforming in the market. Even it's not even showing relative outperformance anymore.
Oh well, one day. But yeah, I mean, everything was really good. Record upgrades for iPhone, for Mac, from Apple Watch. There was a lot of concern about services maybe weakening a little bit during the quarter with some channel checks that some sell-siders were coming out with. And that press release we all saw about query volume for Safari falling year over year in April for the first time ever. But 13% growth for services is very good, and it's going to continue into next quarter. The only other thing to keep an eye on is the Epic Games ruling, where Apple is now required to allow third-party payment links, which allows these companies to sidestep pretty lofty take rates from Apple. There was only a partial quarter impact from that for this period because it was implemented during the quarter. They always answer questions with, I don't know, and I'm not telling you anything, and thank you for your time. And they don't really. It's always funny to see analysts be like, "Oh, thank you so much for the color," after Apple and Tim Cook clearly give them no color at all, and just like, "Oh, thank you, Tim." But I digress. That the App Store is something to keep an eye on. 10% year-over-year growth this quarter. How does this impact them going forward? We shall see. But based on guidance, I don't think it's going to be too detrimental to this category's growth. And then the other thing to keep an eye on, next week, I think August 8th, if my memory serves me correctly, we get a ruling on the revenue sharing agreement between Apple and Google as the default search option on in their ecosystem. So revenue guidance was predicated on that being allowed to continue. So if it's not allowed to continue, they are probably going to have to pre-announce and come out with new guidance. So we shall see on that as well.
Speaking of Google, what did you think about just overall advertising so far?
I really heard the Canadian there. I'm sorry.
A boot?
We can continue. Yeah, I did hear it there.
What
Not many words.
About the advertising spend so far this quarter. I mean, Meta, Google, Amazon. So far, it's looking like quite a smashing success. But maybe you have a different take.
I do not have a different take. That was the best. That was the best Amazon segment yesterday by far. I mean, foreign exchange neutral growth was several points higher than expectations. It sounds like the Roku and the Disney partnerships they announced during the quarter are going to be somewhat material to near-term growth, but we'll see. Meta was phenomenal. I mean, the price per impression growth, which everyone was freaking out about because of all of the alt data that came out during the quarter showing how cost per impression was falling for Meta faster than it was supposed to. That didn't materialize at all. So I mean, pricing was great, impression growth was great. And pricing was great because, again, their targeting is getting so much better. And so that's the best source of pricing power because return on ad spend is rising, and that's a structural way to fetch more dollars per impression. But I mean, yeah, Roku was also pretty good yesterday from an advertising point of view. Again, tough day to have an earnings pop sustained when you have tariffs kicking in and gigantic payroll revisions and now nuclear submarine threats breaking out a little bit. So a bit of an Armageddon type headline day for markets. So again, if you reported yesterday, kind of tough luck. It bodes well for everyone else who's still to report. And really, who's left? I mean, Snapchat has a way of underperforming when everyone else looks really good. But Pinterest usually is pretty well tied to how the digital advertising sector is performing. Trade Desk is usually pretty well tied to that. Magnite's pretty well tied to that. PubMatic, all these companies that have real pieces of that ecosystem. So when the big three are talking about trends being really good and trends in the next quarter remaining really good, just based on revenue guidance from Amazon, which was excellent. Meta's revenue guidance was also excellent. Google's guidance was pretty darn good too. I mean, it just seems like full speed ahead here.
I don't know if you cover this name. I apologize if you don't. You can just brush it off. But Reddit, I don't cover this name. The beat was so insane, it made me want to start looking into it.
I don't know much about the company, unfortunately. I know that I don't really know very much about it. I don't know is my best answer.
Got you.
Yeah.
Evan, anything else you want to touch on?
Yeah, no, I want to ask you guys. I didn't get the chance to dig too deep into the Coinbase numbers. I know this is just kind of a general area you guys are going into, but what's happening there? I
Yeah,
saw the numbers looked like a very large miss. Maybe it was the EPS. One of them I know was very far away from what. Tell me more.
Yeah, I was surprised to see it sell off so much. I didn't listen to the call, but the funny thing about crypto volume is like it's all completely like available. Like the availability to see what percentage of the market share Coinbase has, and then what percentage of actual crypto volumes is completely available information. So I was surprised that the market sold it off so much on earnings that I didn't think were that bad. But I'm not a shareholder of the company, and I potentially do want to be though. I love Brian Armstrong so much. I think he's such a strong leader of the company. But we're in potential early days of massive crypto changes, whether you're talking about like the Genius Act or Clarity Act that are going to be coming through. So I think it's one of those names.
Is that institutional side of the business the one you're more interested in?
No, well, it's a little bit of both, right? Institutional is exciting, but the take rates are so unbelievably small. So I think that the way that their transactional revenue is spread out is that 87% of their revenue, it comes from retail, but something like 80 to 90% of the volume comes from institutional. So it's extremely different on the take rate side. So although institution is exciting, it still is heavily a part of retail. They're in 100 plus countries. If they start to put out things like tokenized assets for trading, they've asked for approval for that as well, similar to what Robinhood has done. I just think that they will be able to get stickier and stickier users, more direct deposits. Like, I think finance is heading in the direction that they've been building in since they've been a company, right? So I think that they will do well. I think that they have a young CEO, extremely talented team. If you ask any person or leader in the fintech space, they will say Coinbase has one of the best engineering teams in the industry. So it's exactly what I look for a great business. However, I just haven't pulled the trigger because I was either too slow whenever they sold off, or feel a little worrisome whenever, you know, the prices jack up a little too fast, going from like 30 to 300 plus. So, but I didn't listen to the quarter just yet. I can't be like Brad. I don't get how someone goes through like 5-6 companies reports in a single night. I pick one or two and I stick to that.
Oh, I do not get through 6 in most I do in a day is like 3, but I mean this week it's like 3 a day. So
yeah.
Up. Six is too many. That's way too many. I
picked one.
I've promised readers one time since the newsletter went live, three reviews that all came out at 4 p.m. and I think it was writing until like 2 a.m. And at that point, I decided 2 max per night. That is it. Yeah.
Yeah.
What did you guys think about the Amazon call? I was listening to that, just listening to Andy Jassy go on these 8-minute long answers.
I think it's so. I mean, it reminds me of Sundar getting a ton of shit from investors a few months ago because the stock price wasn't performing. He's not the most charismatic person in the world. He does tend to ramble a little bit, but I like boring, non-charismatic, quiet, and not non-flashy leaders. So I didn't. I mean, so many people were picking on him after that call, and I think it's just the stock's down, and so I'm mad at who do I get mad at? I get mad at the CEO, and no matter what. So I question whether a lot of those people actually listened to the call and everything that Amazon had to say. But yeah, I get that. No one likes seeing falling stock prices, but we have to understand that it's been 3 months of up and to the right. So if we get a little bit of a breather like we've gotten the last 36 hours, and I don't even know if we can call this a breather yet, we're still near all-time highs. It's like, I mean, I feel like we've been a little bit spoiled for the last 3 months, and this is kind of reversing that spoiledness in markets a little bit, that complacency that maybe had been bubbling up a little.
Yeah, I think that's fair commentary for sure. Like, even if he was perfectly on point, that people would still point and say, hey, it's this person's fault, fire this person, whatever. Like, yeah. You know, SoFi had taken a lump of crap just depending on which direction the stock is going, that person is doing right or wrong. So I agree with you there. However, some of his comments about if they are going to win in cloud and stuff like this, I just didn't. It sounded like he wasn't even confident in his answers, and that they're hopeful something's going to happen. But Microsoft's a strong competitor, and Google's a strong competitor, and I don't know. It didn't instill a lot of confidence, even though I do still think that Amazon Web Services will be, a market leader here. But
yeah, I think that he'll never be over the top, like promising things and saying like he's the opposite of Elon. I think is a good way to put it.
Sure.
But I think one valid criticism is that this is not an AWS demand issue. Like it was tweeted out by a million times that the backlog growth is 25% year over year for AWS. So that shows you if they were better at putting supply online faster, like that's what Azure's doing better than them right now. They're standing up capacity more quickly than AWS and turning that backlog into revenue growth more meaningfully than AWS is right now. And I think you can say Andy Jassy do better in that regard. Like maybe a fire needs to be lit under his ass by Jeff Bezos or something, because they do need to move more quickly. And it's fun to say, well, the backlog's amazing, so future growth is going to be amazing, but growth right now should be better. And that's why. So it's not overly concerning because it's not AWS. His product sucks and no one wants it, and they're all leaving them and going to Azure and Google. It's not that, that would be kind of a deal breaker. So excellent that it's not that, but still you can't call it a positive that their competitors are moving more quickly than them in this regard and turning this opportunity and turning their backlog, turning all of this demand into more immediate revenue than AWS has been able to do so far.
Jassy also was the leader of AWS for a long, like Jassy is the AWS guy. So that I feel like also any slight underperformance there probably gets a bigger microscope for him personally.
Yeah. It is important to remember that, right? And it's exactly where the company is headed. Like
it makes sense why they made him CEO. Yeah,
100%. Exactly.
But it's been a couple years now, and stock's still the company's still doing great. Stock's in okay. Maybe I actually don't know the metrics since he's been CEO. My guess is it might be underperforming a lot of the other names. Yeah, and at some point, questions start to get asked. The stock crowd, the shareholders can be a fickle bunch sometimes. Yes, especially when you're into like 5 years.
My understanding is Jeff Bezos goes into work every day still to this day.
I don't know. So, did you see that video with him, LeBron, and Ken Griffin?
No.
St. Tropez or Trapez or however you say it. He was partying. Yeah, he was having a good time.
He deserves it.
He deserves it. Well, he was also selling 25 million shares, which we're done with that sale. We'll see when the next one is.
Yeah, there will be another one.
There will
be another one. That's why I have to put the for now in all of them.
It's just but I mean, everyone cares about that when your stock price isn't going up. But I mean, Zuck has continued to sell shares all the way up, and we gave him so much shit while he was selling a lot of shares while the stock wasn't performing, and now it's like, oh, who cares? The stock's working. Like that. That's all this is. That's all this criticism and negative sentiment is. It is the stock price is down today, so I'm mad. But if you dig into the numbers, and I don't want to get too much into them because the review is paywalled, so I want to save a lot of that for subscribers. But I think that a lot of these people harshly criticizing him didn't read this transcript.
I mean, overall, every single segment, I think across the board was a slight beat to a decent beat. Like you said, advertising freaking killed it this time. And I'm very confident on a lot of the partnerships that we're talking about for Amazon.com in particular. Like I love Amazon for the next, I think you actually made a tweet about, we're going to be here in 2040 or 2050 and still be complaining that they're not buying back shares or giving dividends. But it is true. I mean, there's no need, or there's no lack of new areas that they can grow into with the setup that they have with cloud and with the largest e-commerce platform in the world. They can continue to expand into, the largest retailers in the world, like they showed off with Nike, or into more healthcare solutions, or what. And this will continue on and on and on into new segments of commerce. So,
Kuiper too. Kuiper is exciting. I mean, they think they're going to undercut Starlink. They think performance is going to be better than Starlink. They've signed a ton of enterprise and public sector contracts before commercial launch. That
The
could
comments
be a
about
large business quickly.
the comments about performance being better than Starlink was I don't know enough about the space on why they're so confident there, but I wanted to learn a little bit more.
I'm not sure why they believe that. That just made my ears perk up. But even if they're not, I mean, if you can undercut them and accept a good margin instead of a great margin on these contracts, this can be extremely additive, not only to growth, but their margin profile as well, just because, I mean, it is still most of the revenue is driven by very low margin e-commerce. So you don't need this to be a 40-50% EBIT margin business and to scale to really notice overall company operating leverage at all. You don't need it to be close to that.
And you're pretty well insulated from the new Steve Jobs of the world that's in his garage trying to cook up a product that's going to go against your e-commerce place. If you're putting satellites in the sky, like in space, it's kind of a little bit, you kind of have to have a lot of cash in order to compete with what Amazon will be doing for their Prime users into the future. So it
I'm
insulates
surprised they didn't
them.
raise prices.
Bigger moat. Yeah, raise the price.
Okay, so I know we're coming towards the end here. I want to get a question. I've heard Tanner talk about this stock. I want to hear Brad's thoughts. Brad, what's your thoughts on PayPal and what they did this week? How those numbers went?
I don't, it's another one of those, people are upset with Alex Chris and people are upset with the company. But if you read the transcript and see everything they did and raising guidance and reiterating multi-year targets that are well ahead of consensus expectations, best Venmo quarter I've seen in a few years, branded checkout stability. When you pull, there was some branded checkout weakness very specific to Chinese vendors right when tariffs went into place, and they've already normalized that volume and that traffic's already normalized, reverted through July. So I just this is one I've owned this for a while, and it's been basically my worst performer of the portfolio. But I don't give up on companies when the stock doesn't respond to good results. I give up on companies when the results aren't good. And I don't think anyone can objectively look at those numbers that they just put out and say Alex Chris isn't doing everything he needs to do to make this a steadily growing payments darling once more. And I think now that we're through Braintree contract renegotiations and that large 5-point drag on revenue growth will be in the rear view, you're going to see this company magically accelerate towards 10% year-over-year revenue growth with a lot of operating leverage, trading at a free cash flow multiple near 10, buying back with a buyback program worth almost 20% of its market cap. I understand it's been, I'm sure shareholders listening to this are frustrated with the performance so far. I'm frustrated with the performance so far. But I mean, yeah, my patience goes away based on fundamentals, not based on not based on near term or even medium term sentiment on how these numbers are being received by investors. So when I look at branded checkout, when I look at Venmo, when I look at Braintree, when I look at Hyperwallet, all these value added services, they're more effectively cross selling. There's nothing in that report that I was disappointed in. So the disappointment would be stemming from how the share price reacts, and that's something that I'm not willing to criticize a company or to get down on them for.
The buybacks on PayPal are just insane. Like
7% share count reduction year-over-year last quarter. That's massive.
Yeah. If the market continues to just give them a ton of disrespect, thinking that there's going to be new players that come in and disrupt them, whether that's a crypto player or social media companies that get into payments, there's been a handful of areas that PayPal's been attacked on. But worst comes to worst, they'll buy themselves out of the market if you give them enough time. So it's a very interesting name for sure. I don't currently hold it. I will say on SoFi and Robinhood for my names, was super excited and very happy with both. Very happy shareholder. I don't care what the stock does for Robinhood. SoFi, you saw what the market did there. Is very, very exciting. And then I think the dilution will be very much in their favor. They're not doing that from a place of strength in order to what some people are saying, rug pull or something like this. It doesn't go into Noto's pockets. This is only going to go feed the business to try to accelerate their growth even faster.
The move yesterday was reassuring in SoFi for sure. After the filing came out, like I didn't even think his explanation was that amazing of what we're using it for. It's fine, good explanation, but the market definitely bought it back. And whatever's happening today, I thought that move yesterday was quite reassuring for SoFi. We'll see what it does going forward.
Well, I mean, dilution, we hate it because it eats into profit per share. So when they say it's neutral to EPS and hint at we're going to grow faster than our current 2026 target because of this new funding, because we see more opportunities to spend, I do understand why people there was a sigh of relief. And yeah, because I mean, shareholder returns are all about how much profit on a per share basis you're delivering and how quickly that's growing. So if you're not eating into that growth with this dilution and you're raising the growth ceiling, which probably means more leverage down the road for more profit growth too, that is an easier pill to swallow than them just kind of staying quiet and making us trust them on what they're going to do with the cash.
I also think they're sandbagging hard by saying it's EPS neutral. I looked at some of the numbers. It doesn't look EPS neutral. It looks like just with this alone, if they were to use this to pay down debts at 5 to 6% cost of debt pay down, that you're saving even to the end of the year. So 5 months remaining, you're getting to at least 33 cents of EPS just based on what they are stating. So
and I
think
mortgage,
this is classic Noto.
You need a lot of money to ramp a mortgage business. And if, I mean, 92% volume growth last quarter, revenue growth, it was either origination or revenue. 92% top line growth for that business last quarter. That shows you they are leaning in aggressively even before we've gotten any rate cuts, which the payroll revisions today basically all but guarantee that we're going to get a cut this fall. It could change with new data releases, but as of right now, that's the general consensus.
Yeah.
So if you want to really ramp that business, which is a very high return business for a lot of players in the space, $1.5 billion to cushion those capital ratios and to give you a lot of ammo to do so without jeopardizing your ability to service student lenders or personal borrowers or student borrowers. That makes a lot of sense to me. So maybe they'll buy something in crypto. I don't know. We'll see. But it sounds like to me that this is either them revving the engine on originations for the mortgage business, or them maybe revving the engine on product innovation from Galileo or the consumer facing product. I'm not really sure. We're all speculating at this point. But
I'm going to take a guess and say it's all three.
Yeah, all I wanted to hear was EPS neutral, faster growth, and my thumb was up. So because it's 2025, I've been following this person for 5 years, and every time he tells me to expect something, it's either as good as he tells me to expect or better. The student loan moratorium, 5 points of rate hikes, regional banking crisis, doesn't matter. They meet their promises. So when he says something, it's not like a trust me, bro. It's a look at the last 5 years since I've been a public market facing CEO. And when I say something is going to happen, it either happens or it's better than I say. So, yeah, I do trust him. There is a comfort factor with Anthony Noto, and so when they come out with that note, it is an exhale for me for sure.
I find it interesting today that the conversation about a rate cut, maybe the chances of that picking up. I'm a little surprised that the stock isn't maybe outperforming a little bit more today. A rate cut, what do you guys think that kind of means for SoFi here? Just in general, if it's coming quicker or more.
If the rate cuts are stemming from employment markets weakening a lot and poor macro, their credit trends are more heavily, their credit performance is more heavily tied to unemployment rate than the federal funds rate. And they've showed us that they can grow pretty easily and accelerate through this rough almost 5% federal funds rate level. So I don't think that macro weakness driven rate cuts are positive for the business.
Yeah, that's exactly what I was going to say. If it's coming from job loss, you have to worry about the defaults as well. Do you guys want to wrap there? We're a little over time.
I have a lot more work to do today, so that would be super helpful if we could.
Ladies and gentlemen, please check out the X accounts of Brad, Stock Market Nerd, Evan, Stock Market News,
and Tanner, Future Investing.
Future Investing, but mainly I'm on YouTube these days. Evan catches me and has to remind me to even tweet once a day these days. So
I got you in the chat. Let me say something before. First of all, for the people watching on Tanner's channel, if you missed any part of this, it's probably because you didn't have notifications on. So go in, hit that bell button. That will get you all these streams. I've been loving those 8 p.m. streams. I'm sure you guys are all getting in on it. And if you want to see it earlier, go hit that bell button. And I know he does not say that all the time. He's also got a lot of really cool stuff in his bio. Brad has an awesome private newsletter, really smart guy if you enjoy his insights. These guys have so much free stuff they're doing, but also some cool stuff which you can find, which they don't like to talk about. But dig in, find it. These guys are awesome. And I appreciate you guys for doing this with me.
Happy weekend,
Thanks,
friends.
Evan. Bye, guys.
Have a great weekend, team.